I do think that there are a number of opportunities, not to forget the challenges that we face. And I think that the opportunities actually get presented often as a consequence of the more volatile environment that we're going into. So the first thing that I would say is that I think you're going to see a greater dispersion of returns between the good business models and the bad business models. And that is an important consideration for people allocated into the asset classes to ensure that you understand what you own and you understand the competitive intensity and the true return profiles of the business, in my case as an equity investor, the businesses that you're investing in. Where are some of the areas of opportunity? I do think that this consumption story is very, very real. When you look at penetration rates for various products and the upgrading story that's going on in the Chinese consumer, particularly outside of the tier 1, tier 2 cities, that wealth effect is driving an uptrading of general daily use consumption items, whether it's the cookware items that consumers are buying, whether it's the consumer products that consumers are buying. And I think there are a number of companies that provide opportunities for that we hold within the portfolio, not least Zhejiang Supor, which is a manufacturer of cookwares, or Midea, which is a home appliance manufacturer and has a very, very strong business model. So there's opportunities in those areas. There are always pockets of opportunity in other markets as well, particularly I feel within financials. I do think that with the higher global rate environment, US dollar rate environment that we're seeing, that does lead to competitive advantages being enhanced for good deposit taking banks. And I think that actually, if the last period has been the age of tech and internet companies within emerging markets, China in particular, I do think that financials and re-engineering some of the ways in which financial companies operate and serve their customers using technology is going to really differentiate winners and losers there. So businesses like HDFC Bank in India are well positioned for that. Also there's a number of companies that aren't owned within the portfolio, like First Round within South Africa, which I think are interesting companies. Discovery Holdings, an insurance company in South Africa, uses technology to price life insurance through its Vitality product. I think there are some of the areas of opportunities that we can focus on. So I'll start with one of the long-term holdings in the portfolio. AIA, it's a very well-known insurance company globally, has an incredibly strong franchise. Now, what is it that makes AIA unique? In my opinion, there's a couple of factors, not least the strength of their agency force and the quality of their product and what that serves to the end customer versus what the competitors are able to offer. And so you have a product which has natural demand pull from the customer base, and a company which continues to invest in enhancing that product offering, training its sales force to be more effective and more efficient in terms of dealing with customer demands. And then you couple that with the fact that it has an incredibly robust balance sheet and significant amounts of excess capital and an opening up of the Chinese onshore insurance market, which it can deploy that excess capital into at a very attractive rate of return. So, that's been a long-term holding for the portfolio, remains so, and we continue to see a healthy backdrop in terms of the compounding that sits within a company like AIA.